The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania, where the Philadelphia Eagles blew a 20-point lead, 17-point lead in the fourth quarter and lost the game. My little grandson wouldn't even go to school today. He was so sad, but he did go to school. Anyway, let's take a look at the first chart that I posted today, folks. This has some, what I think is rather startling information. If you'll notice there in the dark blue type, it says that since September the 21st, every single day in the stock market, we've made more new lows than new highs. The market has to be extremely bearish for it to do that, folks. Even on the day last October the 16th, on that Tuesday, we have this big move up, 550 points. Even on that day, there were more new lows than new highs, folks. That's very bearish. Let me give you an example. If you remember in October of 1987, when the market collapsed on the 19th of October, you realize there were 2,000 issues on the New York Stock Exchange, a little more than 2,000 issues. There were, I believe, around 20 stocks that were up that day. Now, can you imagine that Dow Jones is down 16%, and you've got about a dozen stocks were up on that day? Do you realize how bullish that must be? If you can't get stocks to go down when the rest of the world is falling apart, those must be extremely powerful stocks. And if you went back and looked at the history, that's exactly what they were. Now, I did have all that data, but where it is, I can't find it. But I remember it quite vividly because when I was looking at the overall structure of the market that day, I couldn't even believe there was any stocks up. And yet they were, I think, somewhere between 13 and 25. I don't remember exactly because that's been 31 years ago. But this goes back to the old case. It's when the news is really bullish, it doesn't make any difference, what's happening with the market. It's going to go up. And if it doesn't go up on bullish news, it only has one way to go, and that is to the downside. Now, last night was very interesting in the stock market because we opened about 50 points lower in the Dow Sunday night, and then right before the Japanese and Chinese and Hong Kong markets opened, they were all called sharply lower. We dropped to be down about 150 points in the Dow, and then right before the opening on the Hang Seng and also on the Chinese market, the Shanghai index, instead of opening sharply lower, they opened sharply higher. The NASDAQ, or the Hang Seng, actually was up over 600 points at one time, taking out those highs of last week, which we had that double bottom, of course, there on Friday. So there's a potential pretty good move coming in the Hang Seng. This caused the futures markets, to the S&P, the NASDAQ, and the Dow Jones all to rally sharply because there was no more selling coming out of Asia, and so you saw that move. We see the same thing happening when we look at some of these other markets. If we look at the DAX this morning, we'll put the DAX up first. You'll notice that that had already occurred. It opened higher, backed off a little bit, but it hasn't really done very much. And if we look at the FTSE, which is the real interesting one, we're going to cover this extensively in just a minute or two because we need to switch over to the British pound because it looks like Brexit, folks, could be in some serious trouble here. And the reason why I say that is if you look at the chart that we have on the British pound, we've been very bearish this for a long time. As you can see, we've had these lower tops. We just completed a Gartley up there at that 133 level, and we came down, stopped exactly at the 61% retracement, then went up, almost made a double top at that 132.50, and then we've started to come down sharply. We're trading way below the 130 level now. that sets up this ABCD pattern down there at 1.2828. Now, that's only 150 pips from where we are right now. And with all the news that is going on over in the UK, they had 670,000 people protest against Brexit yesterday. I was watching it on CNN, and I couldn't believe there were that many people. That's a lot of people. And anyway, that was the protest group. So if Theresa May cannot hold the party together, which is going to be difficult for her to do, you're going to see the pound most probably sell off quite a bit. And there again, it's expected to sell off quite a bit. So pay attention to it, because if the market holds, and that's very bearish news, and the market doesn't go on that bearish news to the downside, that's a very, very positive sign that we could have seen a major bottom here in the British pound. But until that happens, you know, the odds say that we're heading lower. I mean, you've got lower tops, lower bottoms, several patterns measuring to the same area, 128.20. So that would be my assumption, is that is what we're looking for as we watch some of these things. So those are just the ones that we're watching. Now, last night, the euro rallied actually 100 pips off the bottom that we made on Friday. That was exactly at a 61% retracement up there at 1.1550. We now broke about 80 pips from that level, so that's going to be retesting, you know, the 114.60 level probably one more time. So we'll watch this one also as we keep watching it. Mr. Z's posted something about the Chinese stock market, that it's jumped the most in 2 years. The Shanghai Composite was up 4.8%. which was its best day since March of 2016, and it was mainly because President Xi further vowed unwavering support for the non-state firms. In other words, either the small businesses, you know, to make a go of it, which I think will be. I really don't believe that these tariffs are going to mean very much down the road, but, you know, who knows? We got enough news coming from every place else to take advantage of anything. Now, I wanted to, since we were just talking about this, I wanted to show you why it's difficult to be a fundamentalist. Let me just post this. These are the news items that are coming out this week, Monday through Friday. And as you see, Wednesday, which is the full moon day, we'll have Norm Winsky that day. You'll notice all the major reports coming in at that time, the time of a full moon. So we're probably going to see some pretty good highs or lows at that point. So this is the problem. See, if you're a technician, you don't have to worry about that, because you're going to be responding to the news, and that's what you really try to do, because it's very difficult to interpret all the fundamentals on all these different things. I don't think anybody can do it. Well, I'm sure there's some people that can do it, but I imagine it would be it'd be pretty difficult to see if it's going to, you know, be that case. Now, since we're in October, I wanted to remind everybody that October has had some really big swing months. And if you notice here in 2008, look at those swings we had. A 348-point swing in the Dow when it was at 10,000. We had another one on October the 9th, which was 678. If you'll remember, on election night, 2016, on November, the Dow was down 880 points. And then it turned, and the rest is history. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and as most of you know, oh, by the way, there's some great news. I think you're going to really like this, especially if you belong to the 24/7 group here at TFNN. One of our listeners over in Russia who trades quite actively did a study, because I had been talking about this Apple for the past 6 or 7 weeks, and the fact of how it works with the opening price, and he shared his statistics over the last couple of months. There were, I believe, 58 examples in how it worked with the opening price. And those of you that would like to see that report that belong to the Fibonacci 24/7 series, if you'll just drop, it won't be up until Wednesday, so wait until Wednesday, and Tommy will put it up on the website so that you'll be able to log on and look at the statistics, because it basically proves that these things really do work well with the opening price on some of these things. And since we've been watching Apple for so long, this is one that has really worked out very, very well. So keep that in mind. That won't be out until probably Wednesday. So just be prepared for it, because it'll be something to look at. It's a good way to to pick up a few bucks. And believe me, that it really did a great job. I mean, you'd be really surprised at the return that it made. It was, and I believe it was only right about 59% of the time, and yet it did have a terrific return. The chart that I posted now is a New York Stock Exchange Index chart, folks, and this is a really bearish chart. Let me explain to you why. This is my opinion, of course. It's my 2 cents worth. But if you'll notice that 78% level that we hit spot on, that 12,300 and change here back on the 10th, that was the big down move. Notice the next 3 days we had a 0.382 rally to the exact 382 of the intermediate high that we made back on the equinox on the 22nd of September. Folks, if we get any lower, we're looking at an ABCD structure that's another 10% lower down in this area of that 1.27 expansion at 11,600 and change. So that could be it. Now, if we get above that 382, that pattern will certainly be wrong. But the fact that it made that 382 rally and then sold off for 3 days is indicative that that's a very important number to be watching. So I think it's worthy of what we're watching here. Um, okay, Larry. Let's see what we have. Um, no, listen. Somebody asked a question about students that I have, and I've been lucky. God, I've been doing this for God, almost 48 years, but I've been all over the world, and I've had many in all the major countries I've been there. One of our favorites, of course, is Australia. But folks, do you know the problem in Australia is the regulations that they have? When I talked to someone from Sydney on Sunday, one of our old students from a long time ago that trades foreign exchange, and his daughter is working at Starbucks. Do you know that she has to have 2 licenses to work at Starbucks? She has to have a license for the health department, and she also has to have a license for the public service department, which is worried about money laundering. Money laundering at Starbucks. I wonder what they charge for coffee there. Of course, coffee's up about 22 cents off the bottom, but these regulations kill things. And since we were chatting about it, one of his friends sells used cars, and his regulations for used cars is almost like a medical regulations. They're worried about money laundering again, and they're also worrying about the public safety, both of the car and also treating the people equally. I mean, I had no idea that Australia had this many regulations, and that makes it really difficult to get some business done. So we'll see if that's going. Okay, Bill, you got me. That's a gotcha. Mr. Bill put a little post in here that you have to have a license to handle hazardous waste if you work at Chipotle. I don't eat at that place, so I don't know, but that was caught me by surprise, was rather funny. Okay, let's go on to a couple other things that we'd like to talk about. The notes and bonds, folks, we're getting really close where we might be ready for a little bottom here in the notes and bonds. I don't know how much of it's going to be, but this is the Treasury bond market. We've been down for well, how many days in a row? We've been down for about 8 weeks in a row now. And we've hit some pretty good support at that 1.618 level, at that 136.15. We're trading at about 138.08 this morning. So we do have a possibility of another ABCD up here above that 139, 140 level. And if we get any type of a rally, the last good rally that we had, which was way back in May, the market went from 140 up to 147. So if we go from 136, 7 points, that would take us up to 143. And as you can see, that would be at a 61% retracement of the move from August. Now, long term, interest rates are going to go higher, but we are incredibly oversold in this market. That doesn't mean it can't stay oversold for a long time, because it stayed overbought for 22 years. So we could easily, actually 32 years, from 82 to 32 years. Anyway, we'll keep an eye on this. Anyway, we should get a good rally. Look, if we do get a rally up to that 143 level, that would certainly be a spot where you'd want to be watching for some resistance to come in at that time. We've been asked to take a look at the Dow Jones Transportations, but because same as we have with the New York Stock Exchange Index, this is one of the most bearish charts that you can find if you're looking at stock indices. You'll notice that we hit that 61% retracement, and then we rallied up to a 382 retracement, and then we came down. We made a double bottom. We didn't quite take it out, but if we get below that 10,300 level in that transportations, you're looking at a price objective of 9,600. That's down about another 6 or 7% if in fact that happens, but it's still a little bit early to see if that is going to happen. We really don't know that. So those are just some of the things that we're looking at here this morning. Someone asked a question about the soybeans. You remember we were talking about that price of 856 in the November soybeans. We hit that last night. So far it has held. I would give it another few hours, and if it's still above that level, you certainly might be able to take a little nibble at it from the long side here. Actually, the better time to do this would either be Tuesday or Wednesday, because we have this beautiful full moon known as the harvest moon, and that'll be coming in on Wednesday, so we'll watch that. We have Norm Winsky scheduled that day, so that'll be a lot of fun as always. So let's watch those with a little bit of interest. We're fortunate enough to get some short corn off at the 377 level. We're looking to cover that about another 6 or 7 cents lower if we get to that level. So that'll be been an interesting one to see how it holds up. But those are what we're watching so far. And we got, oh my goodness, the break is almost coming up here, so we'll have to be able to keep a quick look at that. We got gold. We'll be right back, and we'll talk about the gold.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I posted the chart of the NASDAQ showing you that important low that we made last Friday. We have held above that low so far, and as long as we do that, you know, it's still in a bullish move because that is an important 61% retracement. Now, I've been asked a question about the market from 2008, and I'll bring up the chart here. I remember this quite vividly. This is the weekly chart, and what I'd like for you to remind you of what I was doing at that time. If you remember that August 15th, that was the day that Skype, which was relatively new, was out of commission. There was no Skype, no Skyping. They just totally had a breakdown. I happened to be in Las Vegas, and I was a guest on Tom's show at TFNN, and of course the market went up and made a marginal new high, as you can see there, in early September, and then it came down. And once we broke that low of August 15th, which a major cycle low. It was a huge one. And on that day, August 15th, it was really an unusual market day because the Dow was down well over 300 points and the Russell was actually up on the day. Now, do you know how bullish that is? I mean, if you can't get stocks down with the Dow Jones being down 300 and some, they have only one way to go, and that was up. But the key spot to look at is that double bottom between November and March, November of 07 and March of 08, because once we broke that, that was telling us that we were getting ready to go, to much lower prices. And it was certainly a flying Walinda to the downside because we gave up, we went from 130, down to 67, 66. So, and that bottom that we made there on March the 9th, 5th or 9th, whichever day you want to pick, that was a beautiful butterfly pattern. It was also a 3-drive pattern, and it was one of the most rarest of all astrological signs, very similar to what we had in August of 1987, but in reverse. So that's what we're watching. Yes, that dollar index is starting to get a little action in here, David. We're keeping a very, very close eye on that one because it doesn't take much for it to move to the upside, just a little bit more above that 96 level, and you could be looking at a new top up there around that 96.80. And once we get above that, you could be watching a huge move. Remember that ABCD pattern that we had down there at that 93.50 was just big. And if you remember, that's when we were trading at that 118 level in the euro. So you see the difference in this is it's the reverse of what the euro's doing. The euro's going down, the dollar index is going up. It's just the reciprocal because 53% of that dollar index is the US dollar as a euro versus the US dollar. So that's what we're keeping an eye on here this morning. And we have another question about this full moon coming up in here, folks. All I know is that we'll be able to ask our good friend Norm Winsky if there's anything that's really, super special. I know we have a whole bunch of other aspects. I know we do have a Sun Uranus aspect the day before. Sun Neptune, which is a very big one for soybeans. And since we're looking for a buy in soybeans, that's one of the things that we're watching. And usually corn follows along with it. So that's another one that we'll be, paying close attention to. The corn market stopped exactly where it should have. We talked about this a little bit last week, and we're starting to see this nice correction. We went exactly up to that 78% level at 377. We're now trading below the 366 mark. So, that has a 10-cent profit in it right now. So we're looking for another possible 10 cents to the downside, maybe to 357. And if that comes in on Tuesday or Wednesday, like we assume it might, given the fact that it is that full moon, that could be a very interesting low risk buying opportunity in corn, because that major 3-drive pattern that we made on the bottom there on the equinox on September the 22nd, you can see that one marked in the yellow triangles. That's a really beautiful 3-drive, folks. That's ABCD spot on, making new lows below July and doesn't go anywhere. Shut the front door and raise the rent. Those are the kind you really like to see. Of course, someone's asked a question about the coffee. Yeah, you had to bring that up, didn't you? I have not traded coffee. In fact, I didn't even buy coffee on this last run. I know some folks did, but here's where we are in coffee as we come in this morning. We're already down about 3 cents from the high we made on Friday. But if you'll notice this one in coffee, we've got 3 major ratios staring us in the face here, folks. We have the exact 382 retracement from the high in October of last year, of 2016. That's how quickly this market has rallied. We also have that 1.618 expansion from the move down between July and September. And then on top of that, if you go back and look at the high that we made in August of last year, we're right at the 61% retracement of that, at that 125 level. We're trading around 119 right now as I hear from the crows flying over the coffee fields of Brazil with Juan Valdez. Anyway, this is what you want to watch for now, is to watch for an ABCD structure to the downside, because Gartley said in his book, look for the first ABCD patterns in a bull market to go long, and look for the first ABCD patterns in the bear markets to go short. So those are the ones that we're keeping an eye on right now. That's certainly a big one here in the coffee market. So had a beautiful 3 drive down there at the bottom at 90, 95, and boy, it took off. Mr. Anderson, Rich Anderson of Anderson Capital Management, was fortunate enough to be on that one, and then we will take a look. Since we're talking about Rich, let's take a look here at these Christmas hogs. We're getting down here to a really interesting area. You'll notice the 3 drive to a bottom we had at that level down in around the 44 bucks way back in August when we had Rich on the show. You'll notice that we rallied up to a 78% level, up around 60. That was a 16 handle move. And look what we're doing now, folks. We're making a beautiful ABCD structure a la Gartley. They said this looked for the first ABCD structure in a new bull market, and this certainly could be one. So watch the hogs here at just a little below 50 bucks, because that could be some very, very strong support. Anything below 48, of course, would not be very good, but that's where it could stop, is on this ABCD coming in here at 150 and change. So as long as we can stay above that level, it's got a really good chance for a continuation move to the upside, because that is a perfect ABCD move to the upside. Those are the kind that you really like to see what's going on, and that's what you try to look at. I hope that helps. Anyway, we'll see. The cattle have backed off a little bit, but actually, you know, not too much. But those are just a few of the things that we have going on. We're in the midst of the end of the harvest season now. The crop's coming in pretty good, and China's going to have to buy some. They're going to have to buy some of it from us, because there's only a couple places you can get soybeans, and we're the big daddy rabbit in that show, so we got to pay attention to that one. But I think that has a possibility of a big move to the upside. Folks, I really don't know anything about those tariff stuff. I mean, this is new, but you know, the market's acting like it doesn't care. So just keep that in mind. You know, that's all you can do. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at tfnn.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
It seems like we might have a technical difficulty coming out of St. Petersburg, Florida, but who knows? I'm going to continue talking. Anyway, I posted the chart for Christmas crude oil. As you can see, folks, we are sitting here at the 61% retracement at 68.55. We've taken out the lows of the last 3 days, right at a fib point, so pay attention. This could be a very, very interesting one to watch, because a little bit lower, below 68.30, you're probably going down a whole lot lower. But right now, it's just sitting there, and we'll see if that's going to be the case. We'll do one thing at a time here. We've had a request to take a look. Hold on one second, folks. We've had a request to take a look at some of these FANG stocks that we do keep an eye on. And I wanted to bring a couple of these up to date because they had some pretty big moves. Here's one in Facebook. If you'll notice, we've completed several of these patterns here in Facebook down here at the 150 level, and we had a nice little rally. Now we still have some lower targets there between 145 and 137 because those are the larger patterns, and I believe that's where we're going in the Facebook. As we look at some of the other FANG stocks, we'll just do another one. Oh, let's do a couple here, especially Apple, because that's one of our all-time favorites. It held that really key level at 114, and we closed at 119 on Friday. On a little bit of a down move, but we'll watch it because it's got a chance here that if it can get really strong, you can make new highs in the Apple very, very quickly. But folks, if we ever take out that low at 213 in Apple, that is going to be so doggone bearish that you just can't even really discuss it on the air. It's that scary. Anyway, that's another one that looks really interesting. Here's one that's really showing how you have great news in something, and look how Netflix came in here and had this big rally with the great news. We got up to 382, I believe, and we're now $50 a share lower than that at 332 on Friday, and that type of action is not very bullish. And look at that 61% retracement off of the February low of 2018. So that's, if we get below that 310 level in Netflix, that is not going to be a good sign. So many of these stocks, and that's why I've been posting them to let you see that they don't have anywhere near the bullish patterns that you would be assuming. And when you realize that there's so much selling on days, every day in the market, in other words, there's more new lows in the stocks for the New York Stock Exchange Index than there are new highs. Folks, that's massive distribution. That's not a good sign. Where are the buyers going to come from? This is setting up for a vacuum. Because if the few buyers that are there stand aside, it only has one way to go, and that's to the downside, and that's not a very good one. Here's another perfect example of one of the, one of the best stocks in the world, Google. Yeah, you notice those big dark lines there, the AB leg into February of last year, and the one we just had. Those were equal moves to the downside. We went right just a little bit below the 61% retracement. We've held here for a week, but any move below 1065 in the Google is going to be a breakdown, and that's going to take it down another 10%. That's just like that NASDAQ chart where it rallied to 382 and then gave up the ghost. So whether that's going to be a big deal or not, one has to wait and see if that's going to be the case. So watch it. It's going to be interesting to say the least. The Treasury bonds, we're trading at 138.04. We have a little bit of an ABCD structure in those bonds, a little bit higher. I believe it comes in at 119. Excuse me, 139.01. I believe is the number that we're looking at in that. So we'll keep a close eye, on those bonds because they are scheduled to rally because they've been so beaten up. But these markets, when they're really bearish, can stay beaten up for a long time, just like they can be bullish for a long time. Look how much the stocks went up from election night of last year. What's going to happen on election night this year? Is the same type of thing going to happen? We don't know, but it's going to be probably, and since it's the biggest thing in the news, it's probably going to be equally important to the market too. So I imagine because of the overnight trading that we'll have, keep an eye on that because that was a great buying opportunity down there. In fact, I happen to be sitting here at the house with one of our guests that actually bought it limit down, and it was one heck of a move. I was an observer that night, so I had some other things that were working pretty good, but the stocks I didn't do anything in. But boy, the one thing I did know is in the morning when the Dow Jones was up after being down 880 points, I knew that was this was going to be one huge move, and it was really pretty good. In fact, it stopped right at a 61% retracement that night. We actually put a video out on that it was a really, really important number, but it just, kept going and going and going. So we'll watch it. Let's get to the gold market a little bit. We got gold at the 1223 level. We've got a chance here in the gold for a pretty good retracement here. And this is what I'd like to show you here. I'll just give you my 2 cents worth. Here's we closed on Friday at 12:30. We're now trading at 12:23. We're almost ready to, we're taking out those lows from last week. That sets up a really nice retracement at $1,212 a share. Watch that very closely. Those are those old highs that we made back in October. It's also going to be a 50% retracement, one of the few times we ever look at the 50% retracement. It's also a 1.618 expansion of the move from October 11th to into the 16th. So there's going to be a lot of ratios down there at that 1212 level. I know it's about 10 bucks away, but we can be there by the time I'm finished with this sentence, or at least the show. So it's going to be very, very interesting to watch. Silver is still lagging badly. There's nothing you can say about silver here. It just can't get out of its own way. But if it, when they do go, they will go together. But right now, that is not what's happening. Let's look at this silver since we're talking about it right here. Here's our price objective that we're waiting for. I'll bring it up so you can take a look at it. That takes us down to test that $14.20 per ounce. That's about 40 cents from where we are, 30-some cents from where we are right now. So watch that, especially coming into this full moon, because, these lunar things, being the 14-day cycle and everything, when all of them come together like we're seeing here with the other planets, that can be a big thing. But we'll let Norm Winsky tell us more about that when he comes on the show later in the week. So let's watch that one too. Okay, what else do we have? Well, we got a break coming up here, and then we got the end of the show, and we will cover that, and we'll see everybody on the flip-flop tomorrow. Mr. Z, thanks for posting all of these ratios and stuff in here on the E-mini S&P, because they're very, very important, and because I believe that we've got a chance for some of them to be hit. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have a request from one of our listeners to show what I think is the most important chart in the newsletter this week, and I posted the chart of the Dow Jones Transportations, and as you can see, it's breaking down, and that's one of the reasons why we're seeing all the selling in the stock indices here in the first few minutes. Maybe they reverse us from here, but this is not a good pattern in this Dow Jones Transportation. Maybe it's a bear trap. But if this continues down, you can see that we've got an ABCD structure on this that's going to take the market down, a great deal. How much? Who knows? It could be something really big. I had some wild possibilities of what could happen over the next 6 or 7 weeks that I posted into the newsletter. But, those numbers are so far down the list that if I posted them, they would probably have the boys in the funny little jackets with their little ambulance pick me up in a few minutes and take me over to the Days of Inn nursing home. But right now, that's what we're watching this morning. We got down, remember, we got a low as 27.52.51 in the S&P last night right after the opening. And then it rallied 30 handles up to the exact 61% retracement of Friday's high. You can't make that stuff up, folks. The high was 27.82. The Fibonacci number was 27.82. You know, who knows? South Bend, Indiana, the home of Notre Dame Fighting Irish. Do not like Notre Dame, folks, and I'll tell you why. My nephew, named after me, Larry Gower, was a football player in Terre Haute, and he was very, very good, and he had scholarships to all the major colleges, and he was accepted at Notre Dame, and he really wanted to go there, being the Catholic boy that he was. And for some reason, he had great grades and everything, but they got down to the point to sign the thing, and Notre Dame actually pulled the contract, but he ended up playing for the Colts for a couple years, so he was pretty good after going to IU. God bless you, folks. We'll catch you on the flip-flop tomorrow. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!